Welcome back, traders. It's FOMC day, and that means big moves, big fakeouts, and big risk. If you're not ready for wild swings, liquidity grabs, and stop hunts, today is not the day to mess around. Yesterday, buyers failed to hold 5,727 after Monday's breakout attempt. We dropped straight back into last week's value, breaking the daily one-time framing up low by just a few ticks and closed 40 points below the open. That is a clear rejection of higher prices, but does that mean more downside? Or is this just a setup before Powell shakes up the market? Let's break it down. The 10-day volume profile shows us that value is coiling up, meaning a breakout could be coming soon. The POC and the value area still align with September's range, keeping ES in a well-defined zone below 5,721. The weekly profile falls back inside of last week's value below 5,692, testing the POC at 5,670. The majority of this volume sits behind previous week's value area high, confirming sellers still have control. Daily one-time framing up was tapped out, shifting momentum lower. The 2-hour delta chart shows us Friday's single sprint being filled below 5,665, heavy selling below the weekly VWAP, but no reaction at 5,670, which means we could have potential balance. Globex is now ranging in a tight 20-point zone around this POC. New York TPO shows us the rejection of Monday's breakout, retest of the POC and the value area low, then dumped down. Now we are balanced below Friday's POC and the value area low, forming a nice B-shaped profile, which in this context signals indecision. Opening up above 5,682 could trigger a bullish attempt. The 1-hour chart is stuck in the range between 5,650 and 5,760, awaiting FOMC to dictate direction. Strike price remains wide, showing more uncertainty. So what does that mean for our game plan? Our line in the sand today will be 5,690, which aligns with Friday's value area high and yesterday's value area low. Bulls hold above 5,690, they can open their longs at 5,694, targeting 5,607, 5,730 and 5,752. Bears can open their shorts at 5,686, keeping targets tight before FOMC reaction, 5,670, 5,658 and 5,643. So guys, FOMC day, expect the unexpected. If you're not comfortable with extreme volatility, sit out or trade small. FOMC can trigger massive fakeouts, don't get caught chasing. Stay disciplined, stick to your levels and let the market show its hand. And as always, turn on the notification. I'll break down the FOMC aftermath and what it means for the rest of the week in next update. See you then.